everybody, welcome to Stockradar Stocks on the Move for another week. Today's date is the 29th of August 2024. My name is Richard Lee and I manage the stockradar.com.au website. Okay, just want to be clear on what I'm trying to do here. That's what I talk about in my videos. Our aim is not to assess the long-term prospects of a stock, but rather to manage, look at the price action and assess the current trending attributes of the stock. So we don't want to sit in a stock that's going down, we don't want to sit that's going sideways, we want to be in stocks that are going up. And we know that when trends occur, they can often extend. When I'm looking at stocks like, we'll go through Wesfarmers today, we'll look at Pro Medicus, we look at Rio, we look at IAG, all these stocks that just keep extending and extending and extending. And that's really what our aim is ultimately to get onto. Sometimes we get stopped out, that's fine. Stocks don't behave right. But the main thing is by using our Stockradar strategy of buying new highs and using a trailing stop management, which goes hand in hand, we often capture those big trend moves that we want to capture. Okay, so that's just the way we do it. Buying new highs primarily and trailing stop management and being fairly sensible about how we do it. So it really is a very simple and focused approach of what I do. And that's what I'm trying to do with the video. It's just show you the simplicity of what it can be like. Price never lies. It doesn't fool you. It's about price that we're looking at, not the business itself, which is what fundamentals analyse. So it really is a very focused and simple thing that we try and do. Okay, so I'm going to go through that today a little bit to help you. Stock price analysis offers a simple and clear path to our objective, which is to make some money. Okay, so let's start off by going to, well, firstly, positive thoughts of the week. Because I know it's been an exciting week, as it always is. We're making new highs still, believe it or not with a whole lot of stocks, but with some good stocks, especially those banks, diversified financials, pushing the market along pretty well. Our resources have been a weight in the market. We're getting some new prospects coming in, like property and health. So it's changing all the time, the market. So we're always getting different opportunities to move into different stocks and try and capture those big trend moves. Okay, so the positive thoughts this week, the new highs prevail throughout our stock picks group. I'm going to show you the top 10 in a minute. Of about the 46 stocks we have, I reckon about 25 of them have a top 10 rating of 10. So they're all going gangbusters, which is fantastic. Reporting season's been interesting. We've seen some good results. We've also seen some negative results and also been seeing some dividends being cut, which has been a bit nasty. So that's not such a good sign. So it's not our objective. Our objective is the trend. But there's always nice little bits and pieces, like if you can pick up a bit of dividend, that's always a bit nice. So those have been cut, some of those things there, but some of them like JB Hi-Fi, CBA have all delivered good dividends. Even BHP is probably a bit down last week, but last year, but still pretty good in the scheme of things. And BHP seem to be riding this commodity wave fairly smoothly, fairly smartly at the moment, unlike some of the other smaller stocks which have fallen by the wayside pretty badly. The other side of it is, like I mentioned, new property stocks and health stocks are starting to mobilise as well, which slowly we pick up little stocks into our stock pick group from those sectors. Okay, so let's just go to the overseas markets to start with. And firstly, look at the Dow Jones Industrial Average. Again, it's making new highs. It had a little corrective pattern. It's broken out of it. We've seen some selling occur down here, but the market still seems to be going ahead. Acceleration has slowed a little bit through this pattern here, but still we are making new highs. And that is the key thing there. The price never lies. If we're making new highs, that's where I want to be. So as the Dow's doing that, it's fine. Nasdaq, perhaps not quite so strong. It's had a shot at the highs and failed there for the moment. So again, a little bit of rotation happening there, but all in all, pretty good. We did see some heavy selling on the downside there. So that's a warning shot, as I mentioned to you last week. Across the bow on the S&P and the Nasdaq, heavy selling appearing on that downward trend there. And we're not really through the highs here in the S&P yet, so sort of an exciting time here at the moment. It's an area you could watch very carefully. We could all of a sudden come back fairly quickly from. So just be a little bit careful about what we're doing. Watch this support bubble here we've got down here. We've got horizontal support, moving average and trend line support all going through there, focusing us on that area there. So trend remains intact for now. Our market, as I say, is making new highs, which looks fantastic. We've broken above these highs. We've rid a bit of a sideways move with a slight upward bias here. We'd like to see those buying levels rising all the time, which shows that the buyers are still eager. So we've still got that, and we push through the highs, and we're making new highs. So it all looks okay for the moment. On the commodity side of it, we've got gold, which is doing incredibly well. We hold a couple of gold stocks there these days, Newmont, Proesis. And they're doing pretty well on the back of the gold price rise. So the trend is up. It's had a correction. It's broken out. It's moving higher again. Copper, it's a downer, not looking so good. We're not happy about copper at all. So, the long-term future is no doubt good, but for the moment, cycles come and go in these markets. There's some demand, supply, inventories, all chop and change depending on which drive the price. But the long-term outlook for copper is going to be very good, and we know that's where BHP is focusing a lot of its energy on the moment, not so much iron ore. Okay, Brent crude was just hovering above support. We're having a little bit of a rally, which got knocked on the head. It's just hovering above that support and doesn't really want to go higher yet for some strange reason, but the buyers are still holding it there. So, we've got some huge volumes going through here at the moment, which is quite interesting, and the price is doing nothing. So it's probably something that could break pretty swiftly either way. You just want to be a little bit careful you're not in the wrong way there at the moment. So as there's no trend there, we're neutral there, and I think neutral on all stocks as well at the moment. Okay, so that is the top 10. Sorry, that is the overseas markets. What I haven't gone through for you yet is the top 10. Amcor, well, it's an interesting top 10 because I said before there's probably about 25 top 10 stocks. I've just taken a selection here of those top 10 rating stocks. Amcor, which is a bit of a surprise, but it's going really well. Ansell's had a good recovery and a big jump last week. Brambles, another one, had a big jump, good result, and it's pushed through some highs there. Fisher & Paykel, we've been on this one for a while. It's one of those health stocks that's starting to move pretty well. IAG is a long-termer. Medibank Private, a new one that finally made some new highs and is looking interesting again. We've got Newmont's rising in the back of the gold price. Rare Group's doing well. Ramelius is doing well in the back of the gold price. And Wesfarmers, which you can see here, it's done really well. It's had a good trend. It does yield a bit. It probably yielded a lot more when we first bought it, back around $50, just above $50. It's now at around $76, and it's made a new all-time high. It's making new highs. It's doing everything right. The volume is good. Momentum is good. It's above the moving average, which is providing support for it. So all those constructive things are there, saying the trending attributes are strong for Wesfarmers, and it certainly is as it makes new highs in price. So that's been a really good stock there. As far as the stock pick count goes, we're up 4 this week. Net, I think we lost 2 and added 6. 4 new stocks for you to have a look at this week. So we've got 46 stocks of 154 at the moment. So that's a stock pool of 46 trending stocks, and that means the rest of them aren't trending. They're either going sideways or down. And of the ETS, we have 15 of those out of 24. So the market's looking solid at the moment. Although we worry about lots of things, and there are things on the horizon, whether it's geopolitical events, whatever it is, inflation, all sorts of things, but the market continues to go higher. So we're in our selected stocks and the indices as well. So there's plenty of opportunities for us at the moment. So let's just have a look at a few of the long-term trending stocks, which is really what I try and capture. I know I go over these things, but I really want you to understand that these are important things that we need. We don't need lots of stocks. We just need the good stocks that are going up. And I've been in these stocks for quite a while. So we're just going to have a quick look and just to recap on what we're doing here. Pro Medicus, again, with the long-term trend, we can often have a couple of shots at these stocks as we protect profits on any significant pullback. We can always enter on a new high. So with Pro Medicus, we've done exactly that. Let's get that back there. Okay. So Pro Medicus now, well, with one trend up through here, we've had a second one through here where it broke up about 106 and it's now up about 150 and making new highs again. So we just keep moving our stop up. You can have a look at this chart. There's all the evidence here. We set a trend reversal here. We set an initial stop. The stop trails up below these lows until that stop gets taken out. When the market goes below the stop, we get out. And this one was a one-day wonder, as we know, but the market did go to make new highs again. So we follow it regardless of what the price is doing. It's a bit like CBO, which broke through at 110 and is now 140. Some of these prices are really irrelevant, and what we think is a high price is not necessarily a high price because things can change pretty quickly and our perspective can change very quickly. So with Pro Medicus, it was about $50 at the end of 22. It's now $150. At the start of 24, and it's just continued to rise. It's a high PE stock, and we will have a crash at some stage, but from where it comes from, we don't know. So for the moment, we just keep carrying on with this rise, which is doing very nicely. Thank you very much. Okay, Insurance Australia Group has been a slow and steady trend, which we know, but it's also looking pretty interesting as it moves into an area of resistance. Sorry, that's not Insurance Australia. As it moves into an area of resistance, which has been the old highs up around here, not the actual ultimate highs, I don't think, maybe the ultimate highs, up around just around 850. So we can see the downtrend, the accumulation, the uptrend phase, which we've been very nicely onto here, and it's now moving up towards, still making new highs, and moving up towards this area up towards 850. Now, it may get there, it may not, but we've still got these new highs, keeps breaking new highs, have a consolidation, breaks to new highs, moves another leg. Good volume through here. Momentum has been steady, very nice and steady. In fact, it's accelerating, and it's above the average. So it's just a stock, the simple rules of trend, volume, moving average, and momentum give us a signal. It's a weight of evidence thing. I don't base it on one single thing, but it's a weight of evidence thing. So here, the Insurance Australia, in fact, all these four stocks I'm showing you, Pro Medicus, Insurance Australia, Rea Group, and Telex, all got trend intensity ratings of 10, which means all the attributes are in place for these to continue to rise. Okay, it won't go on forever, but we just monitor it each week. We raise our stop as the price goes up each week, okay, until it gets hit. Okay, so that's Insurance Australia, which has been a beautiful trend and is still going higher, and I have no reason not to think that it's not going to go higher with this beautiful volume of momentum supporting it. Okay, Rea Group is another one. We've got Rea Group and Car Group up around the highs, and we've got Seek down the lows. So they're different markets, I know, but they're sort of similar. They were all tied into similar businesses, online businesses. And I'm going to have a look at Seek in a minute. But Rea Group, again, this is just a simple chart here, which just broke to new highs, which we bought, and it's now gone from about 175 up to about 220 now. And looking good, trend intensity rating 10. You know, it had a little bit of a sideways push above the highs there, but it moved higher. The volume's been very good, and the momentum has also been very good through here as well. So it's above the average, moving average, which is providing a nice leg of support. Okay, so you don't need to look too further on to try to find things you don't want to find. These are the things we do, and these are the things we focus on. There's lots of other opinions and ideas and news which can rattle your cage, but don't let it rattle your cage. Keep to your process, keep to your system. Okay, so that's Rea Group. Telex Pharmaceuticals has been a very quick run. We've had about a 50% gain on this stock in a very quick period of time. It was a simple breakout. We set our initial stop at 15%, and then we can move it to break even as quickly as we can. And once it's past break even, then we've got a bit of breathing space because we know we're no money at risk. Remember, this is all about money management and managing your risk. Okay, so. And they don't always work out these ways, some don't, and that's just the way it is. But the ones that do are the ones where we make our money. So here we've got break-even stop here. The stop loss is now up around here, up around 16.76, I think. The highs are at $20. I talk a bit about in the newsletter this week. We're about marking your profit to where your stop is, not to where the market is, because it's very rarely you're going to get out at the top of the market. But it's where your stop is where your profit level is going to be locked in at. So that stop level there, 16.76, is where our expectations should be set. We ended up down here around $12, so we've got a good $4 or $5 in there, and hopefully we'll get some more depending on what Telex Pharmaceuticals does. The trend intensity rating has pulled back to this one to actually to 8. We've had a little bit of trouble up here around $20, and it's not through yet, but we'll be patient. The volume there's been a bit of selling coming through here. Momentum's flattened off. We're back around the average. So in this situation, I'll probably come back to this area here where my trend line is, a bit of horizontal support, and where my stop is. That's where I would get out if it goes below. So it looks okay, Telex. It may well go higher. But we just don't know, so we use our stop to tell us what to do. Okay, now a couple of other stocks, trending stocks that I thought you might be interested in. You know, sometimes we get these explosions like WiseTech. You know, we've been in this stock for a while. I keep missing these ones. I've been in this stock for a while, back since about March this year when it broke to new highs. Okay. We've had a couple of trades in this stock. This is the third trade we've had since we've entered this one. And we've had a bit of a sideways move here, a bit of a chop around, and almost tested our stop back here. But then we've got a good bounce up, and we've now been able to lift our stop well above those highs there in reflection of that. So price trend is up. It's above the moving average, providing support. Volume is a little bit middling here. We can see a bit of selling here occurred there. A nice bit of buying pushed this higher. So maybe we're back on track there. And momentum's also made a spurt higher. So it looks okay now. Again, high PEs, I know, expensive stocks, but you don't worry about that too much. You just ride the waves while they're going up. But when you are told to get out, you must get out, because that's when you're likely to get your big pullback. Okay, So that's WiseTech. The other one I want to look at again is Commonwealth Bank, which has just been a surprise, but again, a very profitable one. So, we saw the breakout here at 110 to new highs. Okay. It's now just trended up. We had a bit of a pullback here, but it didn't stop us out. And then it's risen pretty steadily up to around 140. We've got positive price action. The price is above the EMA. Moving the volumes here, a bit of selling comes through here. Selling is evident, but not enough to halt the trend. So again, that's a little bit of the picture. So the trend intensity rating is actually 9, not positive 10. But apart from that, the price, the volume, and the momentum is very, very strong. So the trend intensity indicator provides a consensus rating of my indicator. So it doesn't have to be perfect to be go. It can be anywhere between +4 and 10 that will actually confirm some trending attributes of a stock. Okay, so this sector, the banking sector, we know Westpac's been doing well, NAB's been doing well. ANZ struggled a bit, resistance around $30, I think it is. But the banks at the top of the trend intensity rating, sector ratings, and they've been sitting there for a long time, and they've been all doing very, very nicely for us. Not that we hold them all, but the ones that have done well have been the ones we've been holding. So Commonwealth Bank is a nice trending stock. Okay, a couple of stocks for you to have a look at this week that aren't stock picks. First, we come to Seek, which has had a terrible, terrible time. And people are saying, why is this stock so bad? And REIT's going up and car sales is going up. Well, I don't know the answer to that question. All I know is that the price never lies, and it hasn't been doing too well. We have a downtrend here. We have an accumulation phase. The encouraging thing is that after the accumulation phase comes the uptrend phase. So that's what we're waiting for. So let's just have a quick look at what we're seeing at the moment. First, we've got the accumulation just below $20 is the major support there, about $19.50. We're now seeing a bit of a bounce off that support level. We're seeing some very, very good volume all of a sudden has come into this stock. So there's definitely some buying, some serious buying now starting to take advantage of these low prices. Momentum, well, it's still weak. It is saying that it's starting to kick up a little bit. Selling power might be drying up a little bit here, which is probably a good sign. So we're starting to get a slight turn in the picture. The average is starting to be tested. So we're getting a bit of a turn maybe happening. Trend intensity rating is still -8, so that doesn't really tell us that's not too positive. But we're just looking at this support level, looking at the volume there. It's interesting. So really what I'd have to look for is this is the trend reversal point, which is up around $27. So it's quite a way off yet, but it's really what I look at, and that's what I'm looking for to happen. I'm looking for things to develop there, from momentum, from price, from moving average, from volume, all those things to build a picture for me. So when it gets to 27, it will be ripe and ready to give me a signal that might go to around 36, which is the old high. So Seek is something, a possibility that's worth looking at. If you're interested in this stuff, we are at a key low at the moment. Key lows are interesting because you can buy at a key low with a stop just below support, and that's another interesting strategy that you can use, because key lows are usually quite positive. Just sometimes takes a while to lift off them. Because it's going to clear out a lot of selling and things like that. So, but Seek is encouraging for the first time in a while, I think. The next one again is Sonic Healthcare, which has been a real downer. Again, the price never lies. It never lied all the way down from 46 down to under 25. I told you the price was going down, and it's still going down. But we are now getting to a few things that I'm looking at that may potentially turn this stock. Now, firstly, I'm looking at the switch zone here. So. We've got the moving average here, we've got horizontal resistance here, we've got the downtrend line, all pointing to this area here around $27, $28. Okay, now if we can get through that level, that looks interesting. Now, that's a switch zone for me, but it doesn't give me a trigger because I don't have a trend reversal or I don't have a new high, which is what I'll be waiting for. So the switch zone is very encouraging for me, but I'll be looking for a pullback to a higher low to give me an idea that a trend reversal is actually happening. So as I'm very conservative, I'll wait for all these things to happen. I let them develop. We've still got momentum. It's still well below the zero level, although it's pushing up pretty hard. Volume is showing some interest. It's the downtrend is still in place. We haven't broken through there yet, so we don't want to anticipate this sort of thing, but just build that picture and put those odds firmly in your favour, because when it does move, Sonic Healthcare is in the health area. It's in diagnostic area, which is a really big area. It's a health stock. It's a big stock. and it will do well at some stage, as we know, because the demographics are so good. So we're just waiting our opportunity. The price has fallen about 50%, and it's looking interesting. So keep that one on your watch file. Trend intensity rating is still -6, so way to go yet. The next one I want to have a look at, as I said to you before, we've been slowly picking off property stocks one by one. We've got about 1, 2, 3, 4, 5 property stocks in there, and there's about 3 of them that are actually on the radar at the moment. This is one of them called Mirvac. And now it's come down a long way from its highs, up around sort of $3.50. It's come down under $2. But again, we've got this huge support level, kilo area of support. Highly unlikely it's going to go below it unless something disastrous happens, but it's already come down a long way. This is why they're always interesting kilos to look at, because although the sentiment might be negative, it's sort of what you want to see down here, because when it does change, all of a sudden sellers turn to buyers and you get this big imbalance of buyers, which pushes the price higher. So that's what I'm trying to do, is trying to get that stage where I can see that the turn is happening, that demand is appearing, all those common logical things that you would expect. This is not airy-fairy magic. This is just really hard-nosed, building your evidence to say this is what's going to happen. So with Mirvac, trend intensity rating is -9. Bang, bang, cross off the list at the moment. But what we do have is we do have a key low. Good point. We do have some very, very good volume here has risen. So that means there's some buying coming in, meeting the selling, absorbing it. Price hasn't gone up yet, so that just means it's absorbing the selling. When the price starts to go up, that means the buyers are starting to outweigh the sellers. So we'll wait and see when that happens. The momentum index is not far below 0. It's still down, but it's not too badly negative. And we've got this area up here where between the moving average, the downtrend line, and the horizontal resistance line, which goes up to around about 245. So there's a fair amount of work that it's got to do yet, but I like the kilo and I like the volume. A good start. Again, if you're into buying a kilo with a stop below the stop below the kilo, you can always try that strategy because it can work quite well. But I think it's an interesting stock to look at, especially what's happening with some of the other property stocks. I know they're all a little bit different. I know Goodman's taken off because of its distribution centres, but other stocks are starting to get on board this at the moment. And I think Mirvac is a quality stock, and it will have its day in the sun. So that's one for you to have a look at. So there's 3 good stocks for you: Seek, Sonic Health, and Mirvac to keep an eye on for you at the moment. Okay, now last week we reviewed a few stocks: ARB, AGL, MQG, which is breaking high, AMP. They're all still continuing on these exciting and positive moves. Small stocks haven't been there so much this week. A lot of the smaller miners have been disastrous, selling off disastrously, like IGO, and they're really not where we want to be. We do have a couple of smaller ones, but we're very careful. Our exposure is always minimal in those sorts of stocks. So the small stocks so much this week. Top stocks have been offering the big moves, the really big moves, the Wesfarmers and the Rares and all those sort of stocks, and IAGs. And they're also safer stocks. Not that they're immune from big falls, but they're fairly safer stocks. They often yield well and just offer you that comfort of working in that top few hundred areas. So, and the miners, as I said, are very jumpy and volatile. Even Rio, Fortescue and BHP have struggled a bit of late. Okay, now I mentioned to you the property stocks there. There's been a sentiment swing there. We've added 5. We've got another 3 on the radar, and the health trend opportunities are growing slowly but surely there. Okay, so that's all the stocks I've got for today. I just want to talk to you a little bit about our focus, which I was talking about before, about what I try and do. Being clear on that, I'm not interested in trying to assess or weigh up the long-term prospects of a stock, because it's very, very hard to do, because so many things can happen that can change pictures very quickly, and we know how pictures can change very quickly. When all of a sudden a stock is looking fantastic, what can go wrong with it? All of a sudden something does go wrong, and you see the price come down. So what I'm trying to do is I'm trying to focus on price, and that's really what it is, regardless of what the stock is, what the price is going to do. Price analysis tells you what is happening to the price, which is what we trade, what we profit from, and what we lose our money on if we're not careful. Fundamentals tell you what is happening to the business, how it's performing, is it making money, all these sort of things. But that doesn't necessarily relate into a rising share price or a falling share price. It can be very disconnected sometimes, depending on market sentiment. So that's why I focus on price, and that's why I said the price never lies. It's always truthful, and that's what I like, someone who's honest. Okay, so that's my main reason behind doing price analysis. Our aim, as I said before, is not to assess the long-term prospects of a stock, but rather to understand the current stock price action and assess its current trending probabilities. And you can see with some of those stocks there, with Sonic Health, Seek, they're a long way off yet. They're looking interesting, but there's a long way off before they're going to do. So they've really got to build me some evidence to say this is a very high probability chance of going up. And even then, it doesn't always work right. Okay, so that's why we have stops in place to make sure we're safe. So the question I asked, by doing all this sort of stuff, does it have a qualified trend? If it does, we follow it, we buy it. Simple as that. So the whole process is supposed to be simple, focused, clear and easy for you to follow and have a very clear path on what we're doing. Okay, so that's really all I've got for you today. Some great stocks out there. I hope you can be sitting on your hands a bit at the moment if you're in the right stocks and just watching these stocks go up. You better be a little bit careful because the reporting season is always full of flavour, ups and downs and dividends disappearing. So it's, if you play the game, you must be prepared to accept those sorts of things that they do happen. And I must admit, I was caught in one myself last week, but I'll deal with it. It's out, it's gone, and I'm moving on to my other stocks. So, it does happen, and we just need to be very careful. Okay, so that's really all I've got for you today. I want you to brighten up your day at Stockradar with a simple and clear process to follow and make your life easier, okay? So watch your trends, heed your stops, stay safe, and I'll see you all next week for another exciting episode of Stocks on the Move. Stockradar, Stocks on the Move. See you later.